The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today is analyst James Carlisle. Hey, James.
Good morning.
And with us also is Graham Whitcomb. Hey, Graham.
Hi, Gaurav.
Nice to have you gents aboard. Let's try and start and finish on time this week, so let's dive right into it. Graham, let's begin with you. There's been news about API, and you do know we like news. I'm surprised by the latest, actually. Tell us what happened, and I'd actually really like to get your reaction to it, because it's a business you know over many years, and your reaction, I think, probably means a lot more than ours. So go for it. We've had another offer.
Yeah, I'm as surprised as you. So we've had another offer for API from Sigma. Wesfarmers had previously offered $1.55 to buy the business just recently. And as far as I was concerned, that was going to be the end of it. Wesfarmers had increased their bid already from $1.38. There'd been no other offers made by other companies. And then Sigma comes along yesterday and offers $1.57 for it. And that's, I think, surprising for a couple of reasons. The first is that API had actually approached Sigma in 2018 with an offer that was more favorable towards Sigma than Sigma's own offer today. But Sigma rejected the previous one. So that's kind of one strike against Sigma's management. Then the other surprising thing is that there'd already been a deal proposed between Sigma and API back in 2002, but that one was rejected by the ACCC, so on competition grounds. So yeah, that's two surprising reasons why Sigma's offer is just completely out of the blue, and I can't really explain what management was thinking or what their rationale is, but they presumably think that they've got a shot at getting it across the line.
And it's mostly shares as well, isn't it? Whereas Wesfarmers is cash, and it's only 2 cents more than Wesfarmers was bidding.
Yeah, they're presumably thinking that they can cut a lot of duplicate expenses and so get the kind of end value of the combined company a lot higher than each of them is worth individually, which might make sense, but it still kind of leaves the problem of actually getting the deal across the line, which seems pretty remote.
But for
at this
API
point.
shareholders, that would require the market to recognize the value of the deal right now and get the share price, get Sigma's share price up, wouldn't it?
Yeah.
So, I mean, so as at the close yesterday, what did Sigma's share price do?
It didn't budge very much. It went up a little bit.
So, I mean, they're offering 2 cents more for a share. I mean, the premium seems very, very thin. I mean,
Yeah, I agree. It's a surprise to me.
It's amazing what happens when someone threatens to take the thing that you've kind of got a half an eye on. You sort of get both eyes on it straight away, and you want it even more.
That's how I kind of picked it as well. It's just reminded me so much of the little kid that is like bored with their toy, but then as soon as another child comes along and touches it, then suddenly they think it's the best toy ever again. So that's what it feels like this time.
It's a great reminder that behind all these big brands and institutions is a couple of big kids most of the time, and they're run by the same emotions and the same petty desires as anyone else.
Well, and it's pretty shocking that so Sigma, so it was API bidding for Sigma 2 years ago, right? Or 3 years ago. And presumably it was going to get rid of Sigma's management back then. And
that might be.
It feels like that might be the difference, which obviously
I agree.
would be,
just shocking management if that's the case. Well, it already feels like pretty poor management from Sigma.
Yeah, I think Sigma's management has a lot to answer for with this one.
Graham, I wonder how much it has to do with Sigma not really wanting to compete with Wesfarmers and trying to stop a quite well-managed and well-funded competitor from entering the space. Would that have anything to do with it at all? Or do you think the Wesfarmers bid is irrelevant to you?
Well, I'm sure it's not irrelevant because the timing would be too perfect. But I can't imagine that would be a huge
It
influence.
shouldn't be, should it?
I
Yeah.
mean, API is going to be run as a separate company, and yes, it'll have maybe some extra financial firepower from Wesfarmers backing, but it's still going to have the same regulatory issues. It's still going to have all of the pricing fixed and everything. So it's not as if API isn't trying its best to cut costs as it is. This is such a competitive industry with such skinny margins that all three competitors are doing everything they can to keep costs down. So I'm not sure that Wesfarmers would have that much of an impact, really.
And then the regulatory hurdles. I just love the chutzpah. Is that how you say it,
Yeah,
JC?
chutzpah.
They got that
Chutzpah,
the
yeah, that's
chutzpah.
right.
Sorry, thank you.
Yeah.
Yeah, yeah. Of these guys. I mean, there's only 3 players in the industry. I love that that Sigma hilariously thinks that the ACCC is going to pass this through.
Yeah, I'd love to have seen what the ACCC's commissioner thought of this when they read the news. That it does just seem so, I don't know, bold and kind of nuts.
Kind of nuts. I think
Has the
bold is nice.
regulatory environment changed? So they knocked it back in 2003. Were the regulations a bit looser back then? Because as I understand it, basically what they charge is set by regulation now. So
Yeah.
there's an argument that the ACCC, who needs competition if there's a regulator who tells you what you can charge?
I don't think that's changed significantly since then. It is 20 years ago, but the community pharmacy agreements have been in place for a long time. So I can't imagine that it's that has changed too much. And the industry itself is still 90% in 3 players, so it's not as if it's become more fragmented or something like that might shift it. I really don't see a huge
But
difference.
to what extent do they is the pricing controlled? Is it so every 5 years it gets reset? Does it? So the ACCC would want to encourage competition so as to force people to reduce their costs, or encourage people to reduce their costs, so that after 5 years they can then set the prices a little bit cheaper or something like that. Is it?
Yeah,
So
exactly.
eventually it
It's
does
still
feed through. Yeah.
Yeah, and that was the justification for the first rejection, was that it still does. You still do need a competitive industry, so there's that pressure on keeping keeping costs low, so then you can flow through for the consumers to have lower and lower prices for the actual pharmaceuticals. And then there'd also be the case of service quality. There's service quality could go down if there just isn't the competition for it. Though, to some extent, that's also pre-written by different regulations on that they've got to meet. So yeah, I don't see a huge difference since 2002.
And what do you anticipate the Wesfarmers response would be? Is there enough gain for Wesfarmers to lob another bid and to take control, or will they pretty good at actually just walking away when the terms don't suit?
It's hard to know, because I think that, I mean, our belief is that API is still undervalued by both bids. So we've got a sell price at $1.70, which is where I think the full valuation would probably lie. So in that sense, Wesfarmers could still keep upping its bid, and I think it's still getting a pretty good deal.
Sorry, go on.
I was just going to say, but there might not be that pressure, because I'm guessing Wesfarmers look at it as well and say, well, the Sigma deal is unlikely to go through, so why do we up our bid?
But the Wesfarmers bid at this stage has been approved.
Yeah.
Subject to a superior bid. So I suppose what Sigma are thinking is that, or might be thinking, is that this is a superior bid. So that means that the board of API has to reconsider. And could they really be doing it just to frustrate Wesfarmers and
I don't
cause
think they could do
difficulty?
it to frustrate.
It seems like a very expensive way of causing problems for people.
I'm not sure what goes on with the due diligence behind the scenes, but I mean, maybe there's a benefit to being able to look in their books and see behind the scenes a bit more or something or other. But you'd think that API's board would recognize that as being an intention if it was there, and so reject it. But yeah.
And they haven't yet commented on whether they're going to allow Sigma to look at the books. I suppose they have to.
They have granted Sigma
the
permission. So
does that mean Wesfarmers and Sigma are both looking at the books at the moment?
Yeah, that's right.
They're both looking. There's a sort of data room, and they're both looking
Yeah.
into it. Yeah.
I wonder, maybe we're looking at this from the wrong angle, right? We know that Soul Patts was a really canny and quite a stingy investor. They like to capture every last remaining cent of value in their investments. I wonder if they
Who
haven't
doesn't?
kind of just shopped it around and knocked on Sigma's door and scared the pants off them and said, "Oh, well, West Farmers is coming. You better do something." You know, this seems like it seems like something. It seems in character with Soul Patts, and to panic and make a bad decision on the spot seems in character with for Sigma management. So that might square that
Does it
circle.
does it enable? I suppose it enables. If Sigma are giving shares, that enables Soul Pats to roll their investment over, so they don't have to pay any CGT at this point. Is that right? If they get
Oh,
holding a
that's
stake in
interesting.
Sigma,
Hmm.
is that something that they might find benefit? I mean, I'm just trying to work out why the share deal would be superior to the cash
Yeah.
deal.
Well, I don't think Soul Pats. They generally like having covered Soul Pats for a long, long time. They generally they really invest with managers. I would be surprised to see them holding
In
Sigma.
Sigma, yeah,
Yeah,
well, that's
because
right. It doesn't
it's
seem,
lousy management. So I'd
and
be
they'd be
surprised. Yeah,
diluted. I mean, so at the moment their stake in API is how much?
it's what.
19%.
Yeah.
And Sigma, that would be diluted within Sigma by what, half?
I haven't
Yeah,
done
not
the
sure. Yeah,
maths.
but it would be diluted by some degree, wouldn't it? So they're yeah, who knows?
In any case, so Graham, what should if you're a shareholder in API, if we took up your excellent recommendation and bought stock at a much lower price, what would you suggest now?
Well, I'd be just sitting back and enjoying the show for now. there's no need for anyone to act, and there's no formal proposal that anyone has to vote on. So
Pretty
for
good
now,
show
you
it
just
is,
get
I've got to say.
yeah.
118, wasn't it? I have
Full
to
of
say,
twists and turns.
I thought about it myself for about 5 minutes, and then
Oh
I don't know.
no.
It seemed like a good idea. It seemed a bit too obvious, and maybe I mean, there you go. Sometimes those opportunities are the good ones.
No, I remember that Dragon's Den, Graham. The regulatory complexity was immense, and I was actually super interested, but I just didn't have any cash. I'm tapped out. You know, buying coal stocks and whatnot. I just
I think it just it's actually a reminder that sometimes it's a bit like ale, I suppose. And ale
yeah,
is one that I did buy.
yeah.
And sometimes you can think, well, the returns aren't that great. It's not that. It's not. This is not going to 10 bag over 10 years. But you know, sometimes the certainty or the confidence. Not there's never any certainty, but the confidence you can have in a 30% undervaluation
Mhm.
is a good enough reason to invest. And you don't need that 10 bagger if you can be comfortable. You don't need because something will happen like a takeover bid to correct that undervaluation and in fact ale's been bid for as well. So
Mm.
sometimes you know you only need when you've got the good confidence that something is undervalued by a bit. You don't need that massive upside for it to be realized and to make a good return in a short amount of time.
So true. It also tells you about where we are in the cycle. Where I had that similar thought, JC, for ale. I know you've been banging on about ale for a long time, and I didn't buy it because I thought, oh, it's a 30% or so, and it wasn't enough. and
But if you get it quickly enough, 30%'s pretty
indeed,
good.
yeah,
Yeah, I
yeah,
mean,
yeah.
and I guess that's the point. And if there's enough confidence in that undervaluation, then
Mm.
someone else will come along and recognize it. I think that's.
In a roaring bull market, though, where things are going up so much so fast, that seems
But I guess
modest.
that's why you get
Yeah,
why they're priced cheaply because everyone's
absolutely.
ignoring them, and
Yes, that's right. Mm.
so I think they're good opportunities, and this has been a good one, and unfortunately not for me.
Well, let's move along to Karoon, actually. Yeah. So a couple of stocks have reported kind of in weird cycles, and it just got me thinking. So Karoon, I wrote up the results, and alongside Karoon, I think a day or two apart, New Hope, which is one of our long-standing coal recommendations, they reported as well. And New Hope's result was a cracker. The most astounding thing about New Hope was that the coal prices received in the last quarter were 2x. what they received in the first quarter, and I've never seen a more stark performance differential from quarter to quarter than I saw in New Hope's result. In the last, so they made what, 300 million or so in operating profit, right? In the last quarter, they made about 50% of their entire yearly profit came in that last quarter, and in the last month, about 30% of their entire profit came in the last month. So you could see.
And how much do they make with the coal price at half? Are they making losses?
No, they were making profits.
Right.
But just not big profits, just modest profits. So they have actually, I think theirs is like the third lowest cost mine in Australia, and it's one of the lowest cost mines in the world, thermal coal mines. So it's very attractive economics here. That's why I think I was too quick really to jump into New Hope, because I know that Bengala asset reasonably well, and I knew it was a very low cost operation. I thought, can't really lose from here, and turns out you can. We're just too early jumping into that thing, but I think it's all going to end really well, and we all know the coal story is doing wonderfully well. Now, at the same time, we had Karoon reporting as well, and look, their results were, I would say, okay. The thesis there is working out. We're getting really good cash flows coming through. Production's coming along nicely, and that was the first time they're reporting results as a producer after nearly 20 years of being in business. So it's coming along nicely. But you look at where oil prices are, you look at where oil equity prices are, and there's a really stark disparity, which reminds me of that disparity between coal prices and coal equities just a few months ago. So the question is oil the new coal? And I think it might be. I think the opportunity that was available in coal stocks, earlier this year, may now be present in oil stocks. So we've got a couple of oil recommendations in Karoon and in Woodside. Now, they're both moved up a little bit, but they're hardly overpriced or crazily expensive, considering where the oil price is. I mean, the oil price is now at $80 US. And ordinarily, if I plug that into my Woodside calculation, I've got a Woodside spreadsheet, but I don't like to base all my recommendations on it because it's never right. But I get close to $40 on Woodside with the current oil price, and it's sort of $20. And there's a whole host of specific reasons why that's the case. A lot of them have to do with the piles of equity that Woodside is going to issue to be able to take on those BHP assets. So the market's already anticipating that and not bringing up the price of Woodside. I think that might actually be the opportunity.
Is there like a 3-year oil price that I mean, is the spot price reflective of what's going to happen over the next 5-10 years?
Look, there is more diversity of opinion and uncertainty about the oil price now than almost at any other time than I can remember. And that's because everyone can see that there's a large disruption coming in the oil markets, right? So there's this big push for EVs. Every auto manufacturer in the world, we've spoken about this before, fellas, every auto manufacturer in the world is ceasing their conventional engine production, and they're moving on to the EV platforms. So there's this big cliff, and I think it's sort of 80% of oil use is in the transport sector. So it's a big cliff coming for oil. We're not sure when that's coming, but that cliff is also being met with a expenditure strike. So something like $1 trillion of capital expenditure has been withdrawn over the last maybe 5 years or so, and an enormous volume. So there hasn't really been an investment in new supply, which is why the price now is rising so much. So how those two variables balance out is not obvious. And that's why I think that uncertainty may be the opportunity as well. You don't get an opportunity when something is blind obvious, right? So I think if you don't have any
unless it's
oil,
API.
or ale for that matter, yes.
But carry on. Yeah. You
Yeah.
don't get a 10 bagger like you do Karoon, eh?
Yeah, well, yes. Or just these coal stocks, guys. They still look half price to me, even after they've more than doubled. But anyway, I've banged on enough about coal. I think oil is a real opportunity at the moment. If you don't have oil exposure, we've had Woodside on our buy list for a long time, and Karoon's been a more recent addition, but it's been sitting there for a long time as well. It's moved up a little bit, but I still think it still probably looks quite interesting.
What about sorry,
I
what
was
were
just
you
going to say
say?
at sort of $80 oil, Karoon is $1.50 or something. It really is quite attractive. So you got to, it's really hard coming up with price guides for these things because they're so dependent on oil. And as I said, I don't know what oil is going to be. But if you have an idea about oil, if you want to fit oil somewhere in your portfolio, both those are quite decent ideas.
I was just going to ask, what's so I'm reading in the papers all about energy prices in Europe and particularly gas prices. So they're in the UK particularly having, or they're facing the prospect of a big energy crisis apparently, because the Russians are not supplying enough gas. They've turned off the tap to a degree to the pipelines that flow into Germany, and because, I think, as I understand it, because the UK is at the end of that sort of pipeline, and after Brexit and everything, that everyone's taking their gas first, and the UK is not getting any, and
Oh, I see. Okay.
so the prices have been going through the roof. Does that have an impact? I mean, so energy prices is. I mean, is it the case that energy prices are soaring everywhere, or is that just a localized sort of situation, and the Poms are better look out, but everyone else is there's not going to be some sort of 70s style, energy crisis?
So the oil price is global and it's the same price with a few quality adjustments, basically everywhere. I mean, the Brent and WTI price do change, but that's a quality adjustment change. So the oil price is global. Gas prices are regional, and they're regional because they require the pipeline distribution to get them around. So the gas price in the US, where they have their own distribution hubs, is different to the gas price on the east coast of Australia, which is different to the gas price on the west coast of Australia. So the gas price does differ, but the thing that is starting to link gas prices together is this LNG price. The LNG price used to be traded right off the oil price. There's now an LNG spot market, and it's pretty shallow. I must say, I don't pay a lot of attention to the LNG spot market. Most producers don't sell much into the spot market, so it's not very relevant, really. But when there is a a big divergence in the gas price, like there is in Europe at the moment, you do see LNG cargoes being diverted away from some place, usually in Asia, and
So
moving into
the
Europe.
the British government should be ordering LNG from Asia, should they? Is that the
Well, I'm not. I don't know if Britain has an LNG import terminal, but
well?
certainly
Yeah, I was going to be
others
my next
in.
question. I'm not sure they do.
I
I'm
don't
not sure
think they
they.
do, but
No,
certainly others in Europe do,
geez, you need to have one of those.
they get most of their LNG from Qatar, and I think there's a few other places, but they certainly don't get it from this way. But you
So
might
long
see
as the
that happening.
Suez Canal isn't blocked, eh?
Oh dear, yeah, I know. There's all sorts of trouble, isn't there? Yeah, but I think if you're going to see an impact, you're going to see it in that LNG price, which is quite nice for a stock like Woodside.
So does Woodside produce LNG as well? So it produces. It's obviously got pipelines running into WA and places, but does it also produce LNG that it can sort of sell around the world?
So Woodside predominantly is an LNG producer. Sort of 80% of their revenues come from LNG, but the LNG is mostly contracted. About 90% or so would be contracted most years, and the contract price is in reference to the oil price. So they'll actually do better out of the oil price rise than out of this crisis on gas prices. So whatever the LNG price does on the spot market is a small benefit to Woodside, but changes in that oil price are larger benefits. So they'll actually do quite well out of the current oil price spike, which is why I'm saying that at $80 oil, Woodside is crazy cheap at $20.
Crazy cheap. There you
It
go.
is, but I hasten to add, it's crazy cheap in the way that coal prices were crazy cheap. In that I don't think it's not just that people have not joined those dots together. That's not what's happening. It's cheap because there's a significant level of uncertainty about future oil demand, and that people are probably correctly discounting, adding a higher risk rate to Woodside. And there's also all this ESG stuff going on. So there's a lot of funds now that just refuse to or cannot buy oil producers, and that might mean a permanent discount to the PE ratio, if you like. So there's that as well. But as we've seen for coal, it's easy to be short sin stocks, and it's easy to talk about ESG when they're not making money. It's harder to do that when they're printing cash like coal stocks are now, and you can see that coal stocks have sort of two, three bagged in a matter of months, and I think they're going to do a bit more. So look, I still think there's a reasonable opportunity in energy at the moment, and we're in there probably a bit early, but I think being a bit early is the lot of value investors will always probably jump in there. If you're a good value investor, I think you're going to be early. Yeah, don't all rush to agree with me, fellas.
No, I'm always early. I'm always early. I'm always in early. I'm always out early. I've got used to it.
And I think that's
right. It works okay.
Yeah, it works okay. Yeah. So I'm guessing neither of you own any resource stocks, correct?
I just find it too hard to judge. I'm always interested by what you have to say, Gaurav, but I just, it's that reliance on a commodity, which I find I like pricing power and all that, which just seems to disappear when you're into mining and energy stocks.
Fair enough. That's a reasonable answer, actually.
Well, I mean, what always tempts me, although I don't tend to buy them anyway, is it's the idea of the lowest cost producer. If you're the lowest cost producer, then the commodity price can do whatever it likes, and if it gets too low, then your competitors are going to go out of business. I quite like the sound of that, but the lowest cost producer really sort of leaves you with BHP and maybe Woodside. I mean, Woodside's is one of the lowest cost producers, isn't it?
It is, yeah. But I guess what I really like and why I always bang on about resources so much is because the contest that you're able to get in resources is uniquely one-sided in the market. I mean, so many good investors, and JC, has just said that like he doesn't like buying them. You're not alone, JC. I would say most good investors just stay away from resources. They don't buy them, which means your competition in the market is, well, you know who it is. It's not.
I feel like you're flattering me, Gaurav, which is to be encouraged. But
maybe they're building their records because they have avoided them, though, and that's why they're the good investors.
Yeah, no, I think there might be some truth in that. That's true. But if you apply the intelligence and diligence to resources that you're willing to apply to other sectors who have factors that are quite unreliable too, so unknowable too. So I think about retail. We've all bought retail stocks. Retail is
not me for a long time.
Oh, okay, well,
because similar problems.
Similar problems. Okay, well, you're uniquely consistent then, JG, because most investors would be happy to buy a retail stock. Well, there you've got the vagaries of fashion and fads, and that's impossible to forecast. Banking, you've got interest rates which drive returns. In tech, you've got you got all sorts of vagaries you can't predict.
But I suppose it's competitive advantages, isn't it? And so competitive advantages, when you apply that to resources stocks, gets you down to being the lowest cost producer.
Yeah,
I guess.
I think that's not the framework. I wouldn't necessarily use the framework of competitive advantages in resource stocks. I think what you're trying to do is watch the markets for irrationality, and it's very emotional driven. So the prices just get out of whack a long way on both sides, and you don't get that huge mispricing so consistently and so often. Like the money we've done very well out of resources over the years, and if you've been paying attention, we've done it the same way every time. There's no magic here. We're repeating the same thing.
I mean, I have to grant you that. I just find I feel uncomfortable when I'm trying to second guess a market, as it were. So when I'm trying to say that a commodity price is too low or too high and has got carried away, that I find that uncomfortable. And
Yeah, you have to be a bit of an arrogant prick to say that I'm
well,
right, everyone else is wrong, and that explains why I do it and you
yeah,
don't.
or you at least have to be prepared to. Yeah, I mean, look, I can see why the market can be short term and get carried away in its thinking. But there's a lot of money being made and lost in oil futures and stuff, and I find that it's dangerous. Well, it's not. Yeah, that's what stops me, I guess.
Hmm.
Um, but even if the price does get carried away, again, it's always going to be to me. It seems that the lowest cost producer who's better protected and more likely to make the most of opportunities, and seems to be a very good place to be. I mean, if I did buy resources stocks, I think that would be my focus.
But then you might get the trouble that if everyone recognizes that it's the low-cost producer, then it's always going to be trading at a
Well, I think they
premium. So you
don't, though. You
won't.
see, that's the thing. It's the long term, short term thing, isn't it? So the low cost producer is the one that really has the long term advantages. Whereas, so when the short term price swings, that when people start being greedy, it's the weaker players which you can see doubling or trebling or 10 bagging quickly. And so maybe I feel
Yeah,
that there is likely to be the crowded trade, whereas the
yeah,
lowest cost
I think that.
producers, the BHPs, they're just too boring. So people,
Yeah,
but
there's definitely some truth in that. Yeah,
yeah.
yeah, but it's just something to think about. Yeah, I think there's if yeah there's a what I like about the work in resources is that there's a process you can apply and reliably get returns. And we've been doing it for 10 years. And I just think if there's such a dearth of rationality in that sector that if you apply a bit of rationality and apply a bit of patience, all these things that we're happy to apply in all other sectors, if you apply it there, the returns are just so predictable and then come around so often that it makes it quite attractive.
Well, I've got to agree that you've said that for 10 years, and it's been a good approach. So you know, I've been missing out.
Well, we've got ale and plenty of other stocks.
Oh,
Now,
easier.
speaking of plenty of other stocks, JC, we've got quite an interesting one that you've brought to the table at the moment with the ticker code MVP, no less. I wonder if what that says about it.
Well, we were talking
I
about
can't
this
imagine you'd
yesterday,
like
weren't we?
that.
I'm slightly uncomfortable with stocks with what seem to be
Mm.
gaggy or promotional sort of ticker codes. It seems like the focus is in the wrong direction. But look, most valuable player for anyone who's wondering what that means.
Oh, yeah, sorry.
But
We should explain that. Not everyone might
look,
know what that is. Yeah.
maybe MDI is taken by someone else. Is it? I don't know. I haven't looked it up. But
Mm.
look, I think that's that they've been that for a long time, and management has changed, and that's, I suppose, a crucial point.
JC, you've got quite an interesting take on this. This is a business you looked at a little while ago and decided to pass on. Now you've come back a second time and we've upgraded it this time. It's quite. I always find that interesting when you look at a stock, the same stock, at a different time, and come to a different decision. Just tell us a little bit about the business, and then maybe talk about
Well,
what's changed to prompt the upgrade.
I'll do it the other way around if I may.
Okay, yeah, of course, go ahead.
Because what's changed is quite simple. Nothing has changed except
Mm.
for management, really,
Which
and
is everything. Everything's changed.
which is everything. Yeah, I mean, look, I don't normally put so much. Normally, I look at management as being in a sort of negative kind of a way, and I put red flags when I don't like it, and I do seek out owner managers, but I don't really tend to award too many points for a strong management, just because I find it too hard to judge. But sometimes, the differences are stark, and sometimes it's not only the operational sort of performance that you get, but also the credibility that it lends a stock, both in terms of the investment opportunity, but also in terms of its ability to roll a product out in the marketplace. And
Mm.
if you have the right executives who know the right people in the industry, and have credibility when they go and talk to regulators, we'll have to say what the thing does in a moment. But so
Yes,
so
that's right.
so, so this is Medical Developments International. What it does is it makes a thing called the green whistle. So it's Penthrox is the drug that goes in it, which is also which is the trade name for methoxyfluorine, which is an analgesic. And they put it in one of these green whistles. People might have come across them. Hopefully, you're feeling better if you did, because they're given for sort of pain relief, primarily for trauma. So if you break a leg, you get badly stung by or dislocate a shoulder or something like that. At the beach, you might be given one of these. By a surf lifesaver. You might be given one of these by a fire engine, a fireman, or
By
an
a fire engine.
ambulanceman. But yeah, not by a fire engine. But so and they give
What a
you
day that was.
No.
they give you
I think they
about
might
half
be
an
giving you
hour.
something else, JC, if the fire engine's giving you
Maybe you
drugs.
just thought it was a fire engine after taking the drug.
Well, John was talking about his mate who goes to, because fire engines attend car crashes often, don't they?
Oh,
Isn't that
yeah,
what he was
yeah, yeah.
saying? And so anyway, look, if you're in a bad spot and you need some pain relief, it gets you from that bad spot to hospital where they can maybe administer something a bit more effective and a bit more. They've got the infrastructure to give you things, other kinds of things. So they're very quick and easy. You pull a cord, as it were, on this whistle, and within 6 to 8 breaths, you're getting pretty good pain relief, and it goes for about half an hour. Now, they used to use these all around the world. Abbott Laboratories had a product called the Analgizer in the 70s and the 80s, and they were using it, Penthrox, as an anesthetic. But those anesthetic doses were much higher, and people started getting kidney problems, so it fell out of use. And I suppose the baby around the rest of the world, the baby went out with the bathwater because they stopped using it for this traumatic pain relief. Except for in Australia and New Zealand, where they kept going with it, subject to strict limitations. So you can only have the dose that comes in the green whistle, and you can only have 2 whistles a day, and you can't use it on consecutive days, and you can have a maximum of 4 a week. I think those are the sort of protocols, and but subject to that, it's actually developed a pretty good safety record. So the company has now taken that to Europe in particular. It's got approvals over most of Europe, a lot of Asia as well, and Russia, and and Canada. In fact, they're trying to get approval in the US and China, which of course would be very big markets. But at the moment, the focus is on Europe, and rolling it out there, which is a huge opportunity. What is it? 30 times the population of Australia. And if you get the same penetration in Europe as you do here, then you get some definitely interesting looking numbers. But so to go back to management, what was interesting was that when I first looked at this last year, the management, and in that article last year, I actually linked to a podcast, a chief executive interview that Alan Kohler did, and I just I felt that the management was a little bit on the promotional side, and it just sort of made me. It's a funny thing, that, because it just sort of makes you doubt everything else, really. And so all the things they were saying, the glass, to coin a phrase, was half empty. um, and actually it's funny, because then that article, or that research, got put to one side, and because this was in March last year, and everything blew up.
Of course.
And so
Yeah,
by the
yeah.
time we eventually published this article, that management had actually been removed, and which made it a bit more interesting. But look, once I wasn't in a mood to sort of change. We didn't know who was going to come in at that point, and given the previous chief executive, you don't know who's going to. You assume that something similar is going to be. That's the sort of culture, I suppose, you think you're stuck with. So we looked, and I put it on the back burner, and then these 2 former CSL executives, Gordon Naylor and Brent McGregor, came in, the former as chairman. So they were, Gordon Naylor was previously CFO of CSL between 2010 and 2015. And then he was put in charge of their new Seqirus, I'm not sure how you say that, vaccine subsidiary, which merged with the Novartis influenza vaccines business, of which Brent McGregor was in charge. And they were then to the main players. I mean, Gordon Naylor was president, McGregor was chief commercial officer or something. I mean, it's a slightly strange name, but I think he was basically the main man beneath Gordon Naylor. And they did a great job at Seqirus, turning it around from being loss-making to profitable in 5 years till 2020. I think they had a little bit of luck. Graham might be able to tell me better, but I think they had a little bit of, well, not luck. I mean, you make your own luck, but they made a quadrivalent flu vaccine, which has done very well for them. And so I think the turnaround has a lot to do with sort of one big achievement. But nonetheless, look, they did a great job there, and they're serious pharmaceutical industry players, and they came in. McGregor's taken a lot of his incentive in the form of options. Naylor bought $1 million worth of stock straight away, a bit more actually, I think, because the price is
Like
higher, and then
not
has
option,
doubled
but
that
on
recently.
on
What's that?
market stock,
On
on
market,
market
yeah,
stock,
and
doubled that
then
recently.
he doubled that recently after their result,
Interesting.
around 390, and so look, these guys, I just think they give the company a far better chance of. They know how to roll, a product out globally. They know how to get approvals around the place. They know who to speak to in the US. Brent McGregor was originally, he's a Canadian, I think, but spent a lot of time in the US. He knows the people over there. Gordon Naylor is based in the UK. And, all of a sudden you're looking at this and the glass all of a sudden is half full. And so where before I just presumed that competition, so because they don't have any IP over the actual drug here, it's a very simple molecule. Anyone can make it. But apparently it's quite hard to make it, to do so. And they have a patented process to do that. And their delivery mechanism, of course, which is so important at keeping the doses, within limits, is they have some intellectual property over that.
So can we just go back to that? So
Yeah.
the business actually doesn't own the drug. It's the delivery mechanism that's their IP, correct?
Well, yeah, they're not particularly clear about what exactly it is about that IP, because the analgizer in the 70s or 80s, whatever it was, that was a similar kind of mechanism. That was a thing that you sort of sucked on. You can see if you Google it, you can see pictures of it. Doesn't look completely different. So
Right.
I don't know what it is about the Penthrox
Okay.
inhaler, the green whistle, that makes it different from that. But there is some IP over that,
Okay.
and they are developing new ones.
So JC, would you consider this to be a device business or a drug business?
I would say it's a device and a manufacturing business, I suppose. So you could possibly, maybe, interesting way is to think of it as a sort of generic drug manufacturer combined with a device business.
Yeah, right.
So it's not a pharmaceutical business in terms of having IP over particular drugs,
I'm not
but
sure
it
the
does
market
have
sees it
this.
that way.
What's that?
I'm not sure the market sees it that way. I've just listening and reading other people's commentary on medical developments. I think that most people get this business wrong. It's been treated like a kind of a pharmaceutical business, and it sounds like it's probably not.
Yeah, I would say it's not, and I suppose what you mean by that people are feeling that it's in trials and
Yeah, that it's developing drugs, that
yeah,
this is actually a drug business, not a drug delivery business. And there's usually
yeah. I mean, look,
opportunity
I
in that
think
when
I'm
people
not
get the
sure what
story wrong.
difference that. I mean, I suppose the difference there is that the approval it's seeking in the US and China. I mean, it does have
Oh
that
yeah,
40-year track record
yep.
in Australia.
Mhm.
The difference is that they know that the drug works.
Yeah.
Whereas a lot of pharmaceutical companies are
Yeah.
trying to work out whether it works.
Yeah, that's right. We know it works and we know it's safe within these doses.
Yeah.
And so the US, the FDA is particularly concerned with making sure they talk about human factor trials. So they're concerned about making sure that the way it's used and the delivery mechanism, ensures that it is used in a safe fashion. But so I forgot what I was going to say there.
Sorry.
But the fact that it doesn't have IP over the main drug and the IP over the delivery mechanism is probably limited, means that it is possible that a competitor could appear. And if suddenly they start selling, millions of these things in, China and the US, you'd think there was a good chance that a competitor would see that and see the 40% plus margins and think, well, I'll have some of that. But the problem there is that the market that competitor would be entering would then be half the size. Let's say, they would start as a minor player against a dominant other player, but let's say they get half the market. The margins are likely to be less because it would be more competitive. So the prize to any new competitor is going to be that much smaller than the market that they were tempted by in the first place. So it's possible that puts off. It's a small niche, it's not. Thankfully, not too many people each year need one of these things. About 1 in 100 in Australia, I think it is. So I think, as I say, when you start looking at it through the lens of the new management, you just sort of it makes everything look a little bit more appealing, and that's really changed the price is a bit cheaper as well, so that helps. Talking of which, the price is a bit cheaper, but it jumped sharply after we upgraded it, unfortunately, which is a pity. I bought some myself 2 days later. I have to wait two days because we have to give members the opportunity to buy stock, and I hope that some were able to buy it at the 420 upgrade price. But it pretty quickly got up towards $5. So that's $5 is our buy price. I paid a little bit more than that. We haven't downgraded it yet. With this sort of stock, it's hard to draw lines in the sand. So, we don't want to be chopping and changing too much. So,
And JC, can you just talk about its balance sheet and cash position, because it's still spending money at this point? Do you think it's going to need to raise equity as well?
I think it's a chance. It's got 30 million odd of dollars. It's going to spend a lot of that this year, ramping up. So it's taken back a lot of the distribution in Europe to in-house, and it's spending money now in Europe this year to sort of try to get that all set up for growth.
Yeah.
So that cash could disappear quite quickly, and if the revenues don't start appearing in a couple of years' time, then it could disappear entirely. But how much more? Look, the market cap is sort of 300 million. And if it needs another 30 million, that's a 10% dilution.
Yeah.
Which would be a pity, but I think not catastrophic. So, that's what I can't see it needing more than 10 or 20% dilution.
Yeah, I do think sometimes that is another source of opportunity occasionally when a business, sometimes it's clear that a business needs capital or might need capital, and the market starts discounting that stock kind of regardless of the scale of the cap raising, and often that can be an opportunity as well. The number of times I've waited for a cap raise instead of just buying the stock and then dealing with a cap raise, it's mostly been the wrong decision.
Ordinate's an interesting one on that because it raised money last year, and for the sake of 10, I forget how much it was, but for the sake of 10% or so of its share capital, it was able to completely sort of copper bottom its balance sheet. And there's a difference, I suppose, between a company that's got far too much debt.
Yes, that's correct.
And suddenly needs to replace that with equity, and you suddenly need to raise half your market cap. But companies which have a great opportunity are valued quite highly. Investors are quite keen to preserve their share of that, as they were with Ordinate, and as I think they would be with this. I mean, it means that you can raise that, little bits and bobs. I mean, obviously, you don't want to have to keep doing that for 10 years, but I think that you're not going to be too diluted before we get to see whether this is going to work. And that's, if it's not going to work, if the Europeans don't like it, if it doesn't get approval in the US and China, then well, we're not going to do very well, which is why it's a speculative buy. But
It's
I
actually
think
a really good point. In my stock universe, the situation that makes that point about debt quite nicely is what happened with AMA versus with what happened with Aussie Broadband. Now, both stocks raised capital. AMA did so to repair a dicey balance sheet, and Aussie did so to pursue some growth projects. And the outcomes have just been really stark, with AMA getting crunched and Aussie Broadband barely missing a beat in terms of
But
share
Aussie
price.
Broadband was just raising 5 or 10% of its
Yeah, that's
market
true.
cap, I'm
It's a
guessing. Yeah,
smaller.
and people are keen to give it to them.
Mm.
People, it's got investors on the balance sheet who really want to see it take advantage of the opportunity it's got, and they're saying, "Here, have some money." Whereas AMA, everyone's like, "Well, really?"
Yeah, but I think that a lot of that has to do with raising cap to replenish a balance sheet and raising capital to pursue a growth project. I think those two, they're very different circumstances, and we should look for that opportunity sometimes. Sometimes the market does, a situation where a company raises money to pursue a growth project, it still kind of gets thumped around. It's something I quite like looking for.
Well, I suppose it depends. If the market's been telling everyone it's got plenty of cash, it's not going to need money, then,
Yeah, true.
the fact that it suddenly says it does need some money is a reflection on its performance. But this is, I mean, going back to medical developments, this is a management that's come in and it says, right, we're going to set this company up for growth. We've raised a bit of money. They raised money last December, you see. That's why they've got that 30 million. And they've said that we're pretty comfortable for a couple of years, but naturally it depends on whether those revenues start coming through. So if it does need to raise capital in a year or two's time, look, I'm not saying it's going to be a walk in the park, but I don't think long-term shareholders should be too concerned.
A walk in the park. I remember those as well. No, this sounds like a really good idea. Actually, it's really nice when you come back to a stock and able to look at it with still fresh eyes. I often find after I've looked at a business, it's very difficult to get a different perspective, to change my mind on it. And it's easier to do, I agree, when something has changed in the business, like management. But it's a good mental skill to be able to be so flexible. I like it.
Well, it took me a year to come back to that. I mean, management
Yeah.
changed in sort of September, October last year, and but fortunately the price is a bit cheaper
Yeah. So it actually
than
worked
it
out
was then,
okay.
so we didn't miss out on too much. But
Now, Graham, being our resident scientist over there, and I know a lover of medical stocks, would love your opinion on this one as well, if you've got one.
Yeah, I think it's a really good idea. The thing that I like about it is that I can see it developing a brand. And although it does sell a generic medicine and it has some IP in the delivery and approvals, which are all very valuable, but ultimately over the long term, and normally you would see a generic manufacturer kind of, well, lose its margin and then end up doing quite poorly. But what I like about MVP is that it seems to be building a brand around that in this green whistle, that people are asking for a green whistle, not just hydroxyfluorine or whatever it is inside,
methoxy.
and methoxyfluorine. And yeah, so I think that can mean that it can maintain that value over time. There are other brands that work in a very generic market, like Panadol in the paracetamol market. It's able to charge 3 times what a generic paracetamol
Yeah, it's a good point.
tablet
Yeah.
will be, and that's just the brand. It's exactly the same thing inside the tablet. So
That
it
drives me
shows that.
crazy. If I'm ever in a pharmacy and I see someone buying Panadol, I have to fight myself to not approach them and tell them to buy a generic instead. I don't. That's like throwing money away. I don't get that. But there you go.
Yeah. Well, it just goes to show that there are still people that will, when it comes to health and maybe pain relief in particular, brand power matters, and
Yeah.
I think MVP is building a brand around its generic
I mean,
medicine.
the slight weakness with that is that there are gatekeepers, so it's not as if people are walking into the pharmacy and asking for, can I get
But
a couple of green
gatekeepers can
whistles
fall
to
for
go?
brands as well.
Yeah, they do. So, but the point is that so it's the fireman and the ambulanceman
And the
I mean,
fire
I should
trucks.
say that they're also trying to use this increasingly in hospitals for sort of short day surgeries, biopsies, and that sort of thing. So, so anyway, the people who are sort of, when you're lying there in great pain, having broken your leg in the skate park, you'll take what you're given by the ambulanceman. And so that brand has to wash really with them rather than with the end consumer. But it does provide some comfort that knowing that that's exactly the thing that's been going well in Australia and New Zealand for 40 years.
JC, I feel as though there's a really interesting story about your experience with Penthrox, but we will save that for another
No,
time.
I've never had any. I've in researching the articles, and actually last year particularly, I was looking
Used
for.
it many times.
No. Well, there's lots of YouTube videos. Geez, if you want to have a bit of, if you've got half an hour to kill, you can look up lots of people who are in fleeting pain until they start sucking on one of these things, and then they start talking some very interesting gobbledygook.
Well, look, that's speaking of interesting gobbledygook. I think that that probably we should wrap up ours right there. Oh, and that is a masterful segue, gents. Come on, that's pretty good. That was good.
That was good.
Unrehearsed. That's an excellent idea, JC. Members can, or anyone listening can check that article out on the website that's up. So
Yeah, I
recommend
mean,
you do
do
that.
beware. I mean, look, it's I've just seen it. So it's 522 at the moment.
Jeez, wow.
So look, we've still got our speculative buy on it, but it's a $5 buy price. But I mean, look, this is roughly what I paid. I've got to say, because I just sort of thought, well, 20 cents here and there. But it's a speculative situation. The price does matter because that just improves your odds. So look, I think a bit of patience, and look, be aware that if it gets much higher, then we'll have to be downgrading it back to hold. So look, the opportunity is sort of just about there ish, but you know keep an eye on it and a bit of patience. Hopefully,
Jeez,
we'll
yeah,
see.
that's a bit of a dampener to end on. The
Well, no,
opportunity is
look, I'm just
there-ish.
trying to. I mean, look, I'm just trying. I mean, the article was published at 420. That was
Yeah,
what. That's. I mean, when I started looking at it, it was below $4.
yeah.
And look, I for transparency, I just bought some on Friday for 521. So look, but I'm taking a long term view of that. I've got a very high tolerance for risk. And so look, you definitely improve your odds by getting a cheaper price.
Well,
So
JC, there's no way I can buy it above 521 now. You can't have
yeah,
Wait
cheap
for
well,
buying the stock.
519,
Yeah.
of course.
I'll take 519. I'll take 520.
Yeah.
Can't do more than that. All right.
Is Karoon below where you bought it? I'd love to buy
No,
some of
it's
that.
way above where I
Oh,
bought
is it?
it.
Oh, yeah, shame. No,
Yeah,
I mean,
Karoon
when I
fell
say
right
I'd love
after
to
I
buy some of
recommended
that
it.
just to spite you I've missed it.
Actually,
Oh, okay.
have you noticed the pattern here? Every time I recommend a stock, it tanks straight away, and every time you recommend a stock, it flies. I
But
think there's
Karoon,
something
you
going
said
on
it's
there.
gone up.
It's gone up, but it tanked out after I first recommended it. Most of
I
the
did
stocks
it.
I first recommend fall straight away.
Oh well,
I don't know
look.
what that says.
No, I don't think it. I don't think there's rhyme or reason. I think, look, smaller stocks. I mean, the bigger stocks when we recommend them, I don't think we have any impact really. But smaller stocks, it does seem we do can have a bit of an impact. So look, I guess everyone wants to just, have some patience and, yeah.
All right, gents, let's wrap this up. JC, thanks very much for your time and insights today.
Pleasure.
And Graham, as always, thanks for staying up. I know it's probably an ungodly hour over there in Vancouver. Good of you to lend us your time.
Thank you, Gaurav.
And for everyone else, thanks for listening.